For the last 50 years, a quiet deal between the US and Saudi Arabia has been the bedrock of the dollar's power around the world. But that deal just expired. So let's break down how this whole system came to be, why it might be falling apart now, and what that could mean for all of us.
So, on June 9th, 2024, something huge happened. That long-standing petrodollar agreement between Saudi Arabia and the United States, it officially ended. And look, this isn't some minor headline you can just scroll past. This could be a massive shift in the global economy. It really leaves us with one big question. What on earth happens now?
Okay, so to really get what's happening now, we have to rewind the clock a little. We need to understand how we got here in the first place. You see, the US dollar wasn't always the king of the hill, and its rise to the top is this fascinating story of power, war, and of course the one commodity that makes the world go round, oil.
You know, it's easy to think that the dollar has always been the world's go-to currency, but that's just not the case. If you look back, for nearly 100 years, it was the French Libra. Then, for another century, the British pound sterling was the top dog. The US dollar only took the crown after World War II thanks to something called the Bretton Woods Agreement.
But where the dollar got its real superpower was from this almost secret deal. Picture this. President Nixon and Henry Kissinger meet the Saudi king on a warship, the USS Quincy. The agreement they hashed out was brutally simple. America gives Saudi Arabia military protection and weapons. In return, Saudi Arabia makes sure that all of its oil, and by extension, most of the world's oil, is only bought and sold using US dollars.
Now, this system gave the United States some pretty incredible advantages. I mean, first, it helped stabilize global trade, which is great, but more importantly, it meant that any country that needed to buy oil, which is basically every country, had to get their hands on US dollars first. This created this constant, massive demand for our currency and also for our government bonds, which basically helped us finance our own national debt.
All right, so if this deal was so good for the US, you've got to be asking, why would Saudi Arabia walk away from it now? Well, to put it simply, the world of today looks nothing like it did back in the 1970s. The entire geopolitical landscape has shifted.
Think about it this way. What do the world's biggest economies export? China exports, well, basically all the manufactured goods. Germany is famous for its high-quality engineering. Japan, electronics and cars. Saudi Arabia, of course, has its crude oil. But the USA, you can make a very strong argument that our single most important export is the US dollar itself.
And you have to understand, this isn't just about Saudi Arabia. Their decision is part of a much bigger trend that's been bubbling for years. It's called de-dollarization, and it's being pushed by this growing alliance of nations we call BRICS. That's Brazil, Russia, India, China, and South Africa. They're all actively trying to trade more in their own currencies and rely less on the dollar.
Okay, this is where it stops being about geopolitics and starts getting personal. We've talked about global trade and secret deals, but what could the end of the petrodollar system actually mean for your wallet right here at home?
Let me try an analogy. Imagine the US economy is a giant balloon. Whenever we run into trouble, our solution is often to just print more money and pump it into the balloon. The problem is that creates inflation, too much money chasing too few goods. For decades, the petrodollar system has been our exit valve. It lets us export all those extra dollars around the world because other countries needed them for oil. But what happens if that valve starts to close? All that pressure, that inflation, gets trapped inside.
So what does that trapped pressure actually feel like for you? Well, it could mean a lot of things, none of them great. The government might have to jack up interest rates to fight that inflation, making your mortgage or car loan way more expensive. Your credit card debt gets pricier. All the stuff we import from other countries could cost more. It could even mean slower growth for your 401k and potentially the need for higher taxes down the road.
Now hold on. Before we all run for the hills and start planning for the apocalypse, there's a huge reality check we need to talk about. Because despite all the scary headlines and panic chatter, the hard data tells a very, very different story. Reports of the dollar's death might be greatly exaggerated.
Let's just look at the numbers. Forget the speculation for a second. Right now, nearly 60% of all the money held in reserve by every central bank in the world is in US dollars. The euro is a distant second at 20%, and the Chinese yuan, which you hear so much about, is just a tiny sliver at 3%.
And when you look at actual day-to-day transactions, the plumbing of the global economy, the dollar's dominance is even more insane. A staggering 88% of all international trades involve the US dollar on one side of the transaction. It's not just the money in the savings account,
It's the money being used for everything.
So with all this uncertainty, where is the smart money going? You might actually be surprised. A recent survey of global money managers found that 18% of them are planning to increase how much U.S. currency they hold. That's 3 times higher than just last year. It seems like when the world gets shaky, people still run to the dollar for safety. So we're left with 2 completely different narratives, aren't we? On one hand, you have the story of a system on the brink of collapse, and on the other, you have data that says the system is as entrenched as it's ever been. So, which one is it? What does the future actually hold?
This really boils down to 2 possible futures. There's the rapid collapse theory, where the world suddenly decides it doesn't need dollars anymore, which could unleash chaos and high inflation back in the US. But then there's the slow evolution theory, which the data seems to support. This is a gradual, decades-long shift, not some overnight crisis. The dollar's role might shrink, but it remains the most important currency for a long time to come.
And I think this quote really just nails it. The world is becoming less dependent on the dollar. That part is true. But the key words here are extremely slowly. This doesn't look like a cliff we're about to fall off. It looks more like a very, very long and gentle slope.
So the end of the petrodollar agreement isn't the end of the dollar, not by a long shot, but it is a really big deal. It's a clear signal that the economic order we've lived with for 75 years is changing. And that leaves us with one final, absolutely fascinating question. As the financial map of the world is being redrawn right before our eyes, who is going to be holding the pen?